YouTube, it's Louis here. I'm going to try and gauge this market to the best of my ability, looking at the chart in both ways, unbiased. And if you appreciate that, don't forget to leave a like, of course subscribe, as we're on the road to 5k. And yeah, let's dive into this video. Leave a comment if you will, and of course share so all the quant community can see this video. On the weekly time frame, we've just opened this new weekly candle, and we can see with the weekly close again we are still under this 55 EMA, this orange one. I'm going to get rid of this darker blue, or I'm going to keep this lighter blue, which is the 12 EMA. You might know other YouTubers use the 10. I've just found in my own trading I prefer to use the 12 EMA, as well as the purple one, which is the 20 EMA, and the orange one, the 55. And you can see on the weekly time frame, when we hit it for the first time, I said, guys, do not expect much movement. We're just going to go sideways between the 55 and the 20, and that's pretty much what's happened. Yes, we've had some closes above, but straight back under the following week or 2 weeks later. Again, under the 20, but straight back above, basically signaling that we're trapped and we're ranging between the 20 and the 55. But I gave you a much clearer range. I gave you $83 as the support, an exact pinpoint area, as well as an exact pinpoint top as well, 150. But if you want specific zones, I gave 130 for as a 130 I think it was, as a resistance, because it was a technical target out of a trade which I gave you guys back over here. We had a nice little bullish trade up to here to 130, which we came down afterwards in and around $90. I think back on the daily time frame, I remember I left you guys with a fib with a golden pocket over here, saying that we don't really want to lose 94, but I think it was getting a bit too confusing. We had like a gold box over here. Let me just get rid of the fibs now, because there's a bit too much on the chart. But I had a little gold box here, and I started to get that. It was a little bit too confusing for a lot of you, because there's just too many boxes on the chart. So I gave you just like a pinpoint location that you don't want to lose. So it was this range low, $83. So the reason why I said we don't want to lose this is because we wanted to maintain in this range to potentially keep this potential, and it's still potential because it hasn't been validated yet, but this potential inverse head and shoulders, which I've spoken about on the channel, that actually gives us a technical target of $400 way back up here in around $375 to $400 is the target out of this head and shoulders, inverted head and shoulders. And to keep this pattern potentially valid, because it hasn't even become valid yet, you do need to hold this low, because this is the range. Can you see the support of the range and the resistance, and how there's a level below here? So there's a level over here, and then there's a level over here. So we did of course lose the support of 83 back over here in May, and that's how I knew we were going to start heading towards 50, 70 and $50 and $40 potentially. We did low at about 37, but you can see we instantly climbed back up and held 50. And just like with Bitcoin, I've been telling everyone we can't lose 18.6k. The same is hit with Quant. That level though is $50. But if you do not want to see $50 whatsoever, I was specifically telling you guys we can't lose 83. If we lose 83, you're coming back down to 50. We had a target over here, but more than likely going to come down because you never retested this as support. That could still happen, guys. Of course, that could still happen, because again, we haven't validated this inverse head and shoulders. You just need to first of all create the right shoulder, then you have to come up to the resistance, and then that's where it's go time. Are we going to actually break the resistance to validate the pattern, or are we going to get rejected? I can show you the neckline right now. Here's the neckline. We're coming right up to the resistance in and around $120. Depends how quick we get up there, but in and around $120. You can see it's descending, so the longer it takes, actually, the lower down this comes. But for now, if we were to pump up in a straight line today, you can see it's in and around $120 that we need to break as resistance. So of course, the support you want to hold is 83. This is going to give us opportunity to try and tackle 120 as long as we're above 83. But if we lose 83, it's not looking likely that this is a inverted head and shoulders, because yeah, you start to come down like this, and then that is not an inverted head and shoulders. That's why right here you want to create this right shoulder, which we are right now. We're coming back up. We need to attack this, confirm it as support. You can see big bear market resistance. This was the level I was able to tell you back in December. If we lose this, it's not looking good. Minimal $70. We went down a little bit lower, but I told you with the Fibonacci's where we're going to head down to. Our next target $57, our next target $45, our next target 38, worst case 35. Then you get another impulse to the upside, correction, then you can do that the same. But the same could happen over here, guys. To be honest, we could come back down, we could lose this $50 support. Remember, this is the level we need to stay above at all costs. But if you want to keep this potential inverse head and shoulders in shape with a potential breakout, you need to stay above 83. But let's say the worst came, the worst of the worst came, we did lose 50, and then there would be targets to the downside. I did make a video, I got laughed at, oh, it's never going to happen. I'm not saying that it will, guys. I don't want it to happen. I'm not saying it will happen. Remember, just stay above 83, then we're going to have a go at 120. If we can get above 120 and this red box 150, then we're going to see upside. The next resistance will be this purple one, but once we're finally above that purple resistance, then it's off to $400, which is the target out of the inverse head and shoulders. And that's the massive pattern on the chart that I'm seeing at the moment. But you also have to say the bears are right in saying we got lower highs and constant lower highs. So if we were to get a deeper correction, you're meant to hold this to go back up. You can see that's a much larger double bottom. But even so, even over here, this is some sort of double bottom. It's so ugly, but it is some sort of ascending triangle, which is some sort of double bottom, just like that. That would be your ascending triangle. And then you can see the W with a higher low over here. So all we need to do is break that resistance going forward. We know that's that is 130, 135. But again, if we want to even touch that, we need to first get above 120 to break the neckline to validate $400. If you then fall back under 120, you invalidate $400. But the moment you're closing above 120, for that moment, we're on our way. We're starting the journey to $400, back to the all-time high. But again, worst case scenario, if you do come down, you don't find support here or 50, like the worst possible case scenario, and you lose the one, then these targets become valid. So that's why I just wanted to make you guys aware. I'm not saying it is going to happen. I don't think it will, but just because I don't think it will doesn't mean that it's 100% not happening. Again, one candle that closes below 83, then that's going to tell me we're going to try and head to 50. But this is a key support, which is the W neckline of this W pattern here. But because it was never held as support, you're more than likely going to fall through. This is a very key resistance, a sash support. You can see all this resistance, so it's more than likely to hold. But I'm just saying, if the worst of the worst case scenario possibly happened, these would be your targets. But yeah, it's not looking likely whatsoever. I just need to tell you guys so you're not caught off guard or anything. Just like Bitcoin has potential targets to 10k, but it looks like as long as you're above 18.6k, which I've been saying months and months and months on end, as long as you're above that, we should go up. That's why you saw Bitcoin actually dump to 18.6k and not go below it. It pumped from it. So that's specifically because I told you guys this is the level it can't lose. If you lose it, you go down. But if you don't lose it, I can't be bearish. I have to be bullish. It's just the same with here, like the $50 level and the $83 level. These are two massive supports and we are above them. And as long as we are above them, we have to be bullish. But just like when we lost this 150 level, bear market level, I had to tell you guys, I'm bearish. Now you're working your way back up like a staircase. You were in this level down here. You crept back into this level here, held support. Then you crept into this level over here as support. You've double bottom now. Now break this resistance. You got a small double bottom here like that, but you also got this massive one over here like that. But yeah, you've even got a smaller one over here. Break the neckline, you got targets to the upside, guys. It's as simple as that, and I'll be here every day doing the quant updates apart from the weekend. And if you're new to the channel, don't forget to subscribe. If you want the education, it's over on my Twitter, Louis_crypto. The link, if you can't be asked to type it, is under this video. I also have this chart that goes back to 2018. If you want this chart that goes back to 2018, it's also under the video in the description. And you just need to copy and paste it. You just type it in, copy and paste it over here. And so that's pretty much it. I have a course and a mentorship. That's all over on Twitter, Louis_crypto. Private message me there. I hope you guys found value in today's update, and I'll catch you in the next one. Peace.